This episode of Analysis in Chains is brought to you by our sponsor, Bankera. Bankera is building a digital bank for the blockchain era, and their token sale is on until the end of February. You can find out more when you visit them at www.bankera.com. And now for our show.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Hello everyone, welcome to Analysis in Chains. I'm here with Vytautas Karalevicius. Vytautas, how are you doing?
Hi, I'm fine. How are you?
Now that I've pronounced your name correctly, I'm great. It's a pleasure to have you on the show. I wanted to talk to you about your company, Bankera, and exactly what you're doing. I found it interesting as I was researching the project that you actually have sort of a banking solution. There have been a lot of companies that have done attempts to do various aspects of banking, like payments and that sort of thing. But you actually went out and bought a bank.
Yes. So actually, viewpoint of Bankera was that we are making Bankera as an operational fork from the Spectra Coin, because even without acquiring a bank, they had a lot of, let's say, bank-like features like the IBAN accounts, payment cards, etc. So that's why we want to do kind of this operational fork to develop Bankera more like a bank and keep Spectra Coin more like a cryptocurrency wallet. And then we had this opportunity to acquire a Pacific private bank, in a, let's say, very short time. And then we took this opportunity because there are not so many banks, let's say, on the sale. Plus, it saves us probably at least 2 or 3 years of development and of paperwork. So we can actually focus more on developing the IT product, user interface, which we are even actually better off. And then having the banking license behind it to actually facilitate the products and deliver what we have promised to our people, let's say.
So you started as Spectra Coin, correct?
Yes, in 2013.
Okay, and what is Spectra Coin, and why did you start it?
Initially, actually, Spectra Coin idea was to make a debit card for the cryptocurrencies, at that time for Bitcoin. But when actually the history was that actually initially we developed the exchange for the cryptocurrencies, or more like a brokerage. Then it was the wallet, and then we added the debit card feasibility as well as a merchant. So now we say that the Spectra Coin is for all-in-one solution for Bitcoin, or for cryptocurrencies, is exchange, wallet, debit card, as well as payment processing. And for us, we are not looking for Spectra Coin. It was always looking about the people who are using the cryptocurrencies for payments online. So even our business logic is about focusing on the people who have a need to pay online, rather than just focusing on people who are using the cryptocurrencies, etc. Because we will more look at the potential of blockchain technology for payments, rather than just, let's say, speculative aspect. And all the time we're more focused on that than rather, let's say, developing the exchange for people to speculate, etc. And now we see opportunity to scale Spectra Coin to the next level by making Bankera and, let's say, becoming more a bank and going to the bank industry. Because even before we started the Spectra Coin, it was actually one of our ideas that it's actually pretty hard to start a bank, especially from zero. So we have to find a smart way to enter. And for us, we have chosen to go through the cryptocurrency, through the exchange, because now we are many companies who are trying to go there by issuing their prepaid cards, or there are also many companies who are trying to do remittances and going to the bank in the long term. And they have chosen the cryptocurrency way, and I think we are on the right track.
How has the adoption of this solution been? When you started with Spectra Coin and your people are using cryptocurrency for payments, was that something, for example, that merchants understood right away, or back when you started a few years ago, was it still very new?
It was extremely new idea, and back in 2013, not many people knew about Bitcoin, and there was, let's say, more fear about Bitcoin than, let's say, the product information, because everyone thought that Bitcoin is there's a high potential for the gags, it's extremely volatile, etc. So, and for us, our solution actually was to eliminate the volatility of Bitcoin, because we're always settling in fiat immediately. But that process actually of fast explaining what is Bitcoin and then explaining all the risks of Bitcoin and how we can solve it, it was extremely long process. And to onboard the fast merchants took us, say, like kind of ages, and now it's a different process. So they're coming to us.
Could you imagine that the Bitcoin volatility and the high price spike was really beneficial to you for having people understand at least what Bitcoin was?
Like for me, like the Bitcoin volatility is kind of a, let's say, key drawback of Bitcoin. Now we also have transaction fees, which is like a bottleneck. But the point is how I always, let's say, market Bitcoin or market cryptocurrencies, that for Bitcoin you have a trade-off between the volatility and it being centralized. And like you have to see the volatility of Bitcoin as an alternative for, let's say, for the processing cost you would pay for Visa, MasterCard, PayPal, or like any other centralized solution. And because you have to have like an asset on the ecosystem which is not fixed to euro dollar, therefore you have a volatility. And then as long as volatility is lower than the one amount you have to pay for Visa, MasterCard, then the Bitcoin size is superior via payment.
Now, you want to remove the volatility and to have a more stable coin so that merchants can use it. So how do you really avoid this type of volatility when people are going in and purchasing coins to speculate?
The point is, like, you cannot avoid volatility, you can just reduce it. And like we as Spectra Coin, we can reduce it by having a high volume. So because volatility goes to both sides, the price can increase and decrease. And then you have like a huge amount of clients. On average, the amount changes, let's say, the expected change is zero or according to the market trend. So that one, you can cancel out the potential huge swings for all of your clients. So let's say if you have a shop and you only accept, let's say, one payment per day in Bitcoin, so when the risk of Bitcoin volatility is very high for you, but let's say when you have an exchange and you have like 1,000 of people buying and selling Bitcoin at the same time, you can actually hedge it out, and the effect is much smaller, and your clients can benefit from this scale.
So what type of customers would be the first to use this?
So actually, first it was the people who were selling their goods online. So it was like the shops of web hostings. Actually, our initial huge biggest base of like clients were actually the companies which were selling their web hosting services or like domain services, like everything what was related to the web development, because these goods are also digital, and then the digital payment is very needed. Also in the industry of web hostings, web servers, there's extremely high risk of chargebacks, refunds, and frauds related to the card payments. Therefore, Bitcoin or any other cryptocurrency is a superior way of payment because you cannot make a chargeback, and the payment and the settlement is final. So it was actually the first industry. Then we had like some kind of clients who were selling the electronic devices online, etc., because their clients were also, let's say, very innovative, and we wanted to use this way of payment, and we wanted to catch this market. Because at the first, it was like two benefits of having cryptocurrency for a merchant. Number one was actually trying to avoid the chargeback risk, and another was actually trying to get the people who already have Bitcoins as the clients. Because in the past days, there were kind of a limited shops you can spend Bitcoins. So all the, let's say, Bitcoin enthusiasts, they usually chose the shops which were accepting Bitcoins.
I'm curious, because you're doing a secondary coin offering, and this is a relatively new concept in crypto of doing, not just your ICO, but an SCO. Why did you choose to do an SCO, and how have your investors reacted to it?
Okay, so actually, we have like SCO as an option, and why we wanted to do it, actually, for us, like, we are building the long-term project. It's not like we are just pump and dump ICO. We are a project with a product, and we will be there for the next 10, 15 years. And just because we want to make it fair, that's why we have described in our white paper that there is a potential option of SEO. Probably it will never happen, or it might happen in the next 5 years or 10 years, because it could only happen if the token price reaches 10 cents, which is, let's say, 10 times higher than it was in the pre-ICO. But we want to have it just an option to raise additional funds in the long term. And by describing it already in the white paper, we kind of give protection for our participants in the ICO and pre-ICO from the, let's say, additional dilution, because we can know what the, let's say, proportion of tokens would be in the long term if we would do the SEO. Because we give this option of SEO because when we will be, let's say, a kind of a large-scale bank, one day we for sure will reach the cap of how much we can scale. And for the banks, you have to have like 20% of as capital of all the loans issued. So let's say if you want to issue loans of 1 billion, which is actually not so much for a bank, you have to have like a 200 million as a capital. So that's why now we want to reach some cap and develop a product from the ICO. and later on, if we need to scale, we will just do the SEO to have additional scale. But that only happens if a token price will be higher than 10 cents. And we want to put it now, so we kind of are extremely fair, because I can bet that there are some ICOs who will probably do the second ICOs in the long term, while they haven't announced it yet and they haven't, let's say, described it yet how it will be. And for us, we want to actually to make everything very clear, and we want to, let's say, we kind of limit all the, kind of cover all the, say, potential scenarios for the long term, for the future. Of course, we have a drawback, because some people think that like our token supply is very huge, which is not true, because we kind of described the all potential token supply for the long term. And even like if you look at Ethereum now, even Ethereum's token supply is not actually precisely defined at the moment. There still can be like a large increase of Ethereum token supply. So the people should be, let's say, should read more in detail what we want to say, than actually to, let's say, to just judge us by the potential token supply.
No, it's interesting because it's a relatively new concept, and I can imagine that if you were leading the way with this SEO potential, that we're going to see more and more in the future. And so what I'm wondering is, what sort of mechanisms do you think are important for people to put in place in their white paper so that investors don't get nervous when about their holdings being diluted?
Like in general, for the ICOs, I think like a good white paper has to cover like all potential scenarios. So for most of the ICOs who don't have a product, it actually has to cover like what will happen like if a product would not be delivered and etc. While for our case, because we already had Spectra Coin and we're actually on the good way to deliver Bankera, that was not the case, because we have already covered that we have a product and we are actually already sharing the net transaction revenue to our clients. But like when like all the questions in the future is, for example, what would happen if you need to scale more and you would not have like enough of capital? Therefore, we have provided this explanation about SEO. And like I think like not many ICOs think about what if they would reach the, let's say, the total cap of how much we can scale in the long term, and we would need, let's say, additional funding. What we would do? Like kind of nobody talks about that. And for us, we just wanted to keep like this option FCO in our white paper to be extremely fair with our contributors, so that like they would know what proportion of tokens we would have like in the very long term if we are extremely successful and we would need to do the SEO. Because this SEO is only in the case if we are extremely successful and we have to be more successful and we don't have to, let's say, stop growing.
We had talked a little bit before about how many companies start with only a white paper and no product, and how the valuations of companies with only a white paper tend to be higher than those than ones with a product. Do you have any idea of why that might be?
Actually, that case might be because it's much easier to promise a heaven than like actually to deliver something. Therefore, it's much easier to criticize the working existing product than criticizing something which is just on the white paper and just interior. Because everything actually interior looks better than in practice. Because to avoid like some imperfections in practice is nearly impossible. Even if you look at the best IT companies in the world, let's say Google, Apple, they all have some imperfections in the products because it's kind of impossible to avoid them. While the many ICOs who are based on the white paper, who promise like to deliver something which will be totally flawless and etc., which actually sometimes infeasible. But like many people believe in that. On the other hand, if we talk about this ICO market and we compare the products, like the ICOs with the products and with only white papers, for most of our ICOs with white papers, if they would be raising the funds not via ICOs, but like in the traditional ways, let's say from venture capitals, angel investors, and so on, the initial investment would be much lower, because we need much less capital to deliver, let's say, a working prototype, and then to scale it up by rising, let's say, Series A, or without doing a proper ICO. And now, like actually, they're getting the funds which will be probably raised only in the Series A or Series B from a normal fundraising in the ICO just based for idea. So I think that still shows that like the ICO market is pretty immature, let's say, and there is no huge efficiency as it would be, let's say, in the stocks market, etc. It's the same case about having a lot of ICOs, of which the price, let's say, doubles on the next day after ICO. So actually what it shows that like the ICO was priced wrongly. And if you would do the same, let's say, in the issuing the shares of a company, and the shares would double, let's say, next day in the exchange, it would just show that like investment banker who was pricing the IPO has done a very bad job. So I think like it still shows that like market is very inefficient and still like very immature at the moment.
I think that we're going to see the market mature, maybe, but I don't know. It's hard to say if the market can ever mature, because the whole point of ICOs is that there's sort of hope for a disruptive, speculative future. And there will always be, I think, this sort of market gap of knowledge between the people on the team and the people who are investing, who have high hopes for a promised disruptive solution, I think. Or do you think that it's going to become maybe more mature and you won't have this level of speculation in the future?
Actually, I think there's actually another thing which this like, let's say, cryptocurrency boom, like bubble or boom is making for people. Actually, a lot of people are learning the basics of finance. They're learning about the technical analysis. We're looking at the graphs. We're trying to, let's say, find the patterns in the movements of the prices of tokens or cryptocurrencies. Also, we will be learning more about, let's say, fundamental analysis by, let's say, how to look at the white papers and so on, how to be more judgmental. They also are getting actual experience by doing in the action, not only just by studying it. So I think like this generation of people who are participating in this new ecosystem will have, let's say, much more knowledge and much more experience in the next 1 or 2 years, because they're learning every day something new. So therefore, I think, and then the market will mature together with like these people who are participating there, because now we have like a generation of millennials who have probably never participated in the financial markets themselves. Now the cryptocurrency is something new for them, and like it's actually the first interaction with open market and etc. And I think like that's gonna be like it will mature together with them.
Okay, and that's actually a really interesting point that I hadn't considered before, that so many people would be learning about this stuff. But this brings up a point that I've talked a lot about with my co-host Neil, which is what are your thoughts about technical analysis? For me, when I think about technical analysis, I find it doesn't work very well even in the stock market, right? It's like, because technical analysis is good for predicting sort of trends, or maybe predicting what the automated algorithms of investment will do, but it's horrible at predicting news stories or things that can actually really shift the market overnight, the things that are unexpected. And with crypto, I find that everything is unexpected. Like it's so much more volatile. Like, do you think that technical analysis really has a place in crypto?
Like it's a coin of two sides. On one side, actually, technical analysis shouldn't work, because if a market is efficient, then like a technical analysis doesn't work. Like it's the efficient market hypothesis. If you should not be able to predict the future price movements from the historical movements. That's a technical analysis. But there's another side, because there's, let's say, so many people in crypto ecosystem who believe in the technical analysis. So they actually say they follow their trading rules based on the technical analysis. So other people can also, let's say, kind of forecast the potential trades by looking at technical analysis, because there are so many people following them. And then everyone, let's say, goes in one, let's say, in one group. Then they actually can shift the prices in their own direction. So let's say if let's say 1,000 people sees that like the price of Bitcoin is going to increase, and they buy it now, by buying now they actually make the price to increase. So in one side, like technical analysis shouldn't work, but like just because there are so many people, let's say, believing in it and basing the trading strategies on that, it kind of works for the cryptocurrencies.
Like a self-fulfilling prophecy.
yes, indeed.
Now, it's interesting though what you said about price manipulation, because I mean that's been a little bit rampant in the crypto sphere, hasn't it? I don't know. It seems like in crypto that it's so much easier to manipulate price if you're respected in the community, or if you have a certain amount of wealth that you'd be able to do that. What are your thoughts on how the crypto community can deal with that?
Like I think like we have like extremely wild west market in cryptocurrencies. That's why now it's attracting a lot of, let's say, hedge funders and like traders from the traditional finance, because there are so many rules which don't apply for the cryptocurrencies. Because the exchanges itself are unregulated, and I doubt they will be like regulated in the same way as the stock markets are regulated in the probably next couple of years at least. Because and then like you can do many things. You can, let's say, make a fake news. You can the market doesn't stop. Like one of the key things while cryptocurrency is also volatile, because if it would be like a price swing of 10-30% for any stock, the trading for that stock would close down on the market immediately. While they not close on the cryptocurrencies, therefore you can have like a price swings of 50% and so on. So that's why you have extremely huge volatility, and then you attract a lot of opportunist traders who actually want to make profits from that volatility. And then also you have like people who are manipulating the price, making a very, let's say, small orders to pump the price up, and etc. etc. And I think like there are also even like probably some exchanges who are also, let's say, kind of manipulating the markets a bit. They are probably maybe book running, etc. etc. So this market is extremely wild west, and it's a good example why actually you need a regulation in the financial markets, because otherwise you never have a stability. You will have like a wild west like now in cryptocurrency. So it's a very good example for the society itself why regulation is necessary.
I think it was like this for a long time in the smaller stock markets. I mean, I remember reading and studying about, for example, the Vancouver Stock Exchange back a number of years ago in its early days, where you would have all of these small mining companies and resource companies that would be selling for a penny a share, and then and it wasn't really regulated how the information would happen, and so you would get people speculating on doubling and tripling your money very quickly, and fake news coming out, and then people pumping and dumping, and we're seeing. I think we're seeing a lot of that in crypto right now, and I guess the question is, while we're waiting for regulatory structures to come in, how do you determine what's a good project and what's a bad project? Or what's a real project and what's a scam? Like what do you use when you're evaluating a new project?
Like regarding the cryptocurrencies, it's mainly focused on the usage of it as payments. So therefore, like for me, like I mostly like kind of still prefer the Bitcoin. I believe in Dash, Monero, and so on. Like only a couple of cryptocurrencies, because there are so many, nice cryptocurrencies from technical perspective, but like they're not used as payments. And for me, like cryptocurrency, it first has to be used for payments. Otherwise, it doesn't have like any value. And I had like this kind of hypothesis that the increase in some alternative cryptocurrency prices back in the spring 2017 was because we have reached the bottleneck of Bitcoin. The transactions were not going through, and like transactions becoming so more expensive. So people rationally should actually move to the Dash or like other cryptocurrencies because they were cheap and quick and so on. But when actually I looked at their blockchains, it was not the case. It was just like the kind of a speculative aspect. Because for me, in the long term, I guess the price of cryptocurrency has to be determined by the demand and supply for the transactions. Because I think people shouldn't keep the cryptocurrencies as an investment, because it actually doesn't generate any returns, like just a speculative asset. But it's like the amazing one for payments. So in my opinion, it should be that, let's say, you keep, some stocks or anything else. You buy Bitcoins, you send to your friend, and your friend just sells Bitcoins to something else he wants to hold. And you only have to hold Bitcoin for these 10, 15 minutes while you make a transaction. And then the Bitcoin price has to be delivered from, let's say, this interval and demand for the transactions. And the speculative aspect should, let's say, just reduce the volatility, because sometimes you will have, let's say, more transactions when America will be awake, and less transactions when America, like New York, is sleeping, as an example, or where more people or more Bitcoin users. And then you have some traders who will be actually doing a day trading, trying to balance these swings out.
Now, cryptocurrencies, if they're being adopted, and if their value as a project is based on how usable they are as a payment system, do you imagine that there's going to be a sort of consolidation of cryptocurrencies in the future down into maybe one or two main cryptos that everyone uses? Or do you imagine it continuing the way it is with everyone making their own crypto? And in that case, like how do you think payments will be managed if there's thousands of different valid payments out there?
I think it's going to be like a couple of cryptocurrencies in the long term. Like one of the reason why, because all the cryptocurrencies are open source. So let's say if you have a very good invention for mechanism of one cryptocurrency, it could potentially be easily employed to, let's say, to existing one, or etc. So let's say if you have like a better way of confirming the transactions, it for sure can be one day put in the Bitcoin's mechanism. So they can copy each other. So then the point is like, even if you invent a better cryptocurrency, it doesn't mean it will be superior, because like all other cryptocurrencies can copy the mechanism. On the other hand, because now we still have like this technological bottlenecks. We don't have like extremely quick internet. Like our hard drives are limited to the space and so on. So that's why blockchain cannot be, let's say, in the petabytes, while it would probably be if everyone would start using the Bitcoin for payments. So therefore, I believe there will be like a number of cryptocurrencies, and let's say people probably in different regions or for different purposes will be using a different cryptocurrencies, but it's going to still be like not more than, let's say, 10 or 15 in use in the long term. And then like when like we will have like a better hard drives, better internet speed, we will actually probably converge to only to Bitcoin or some other only one cryptocurrency, and that will be like the standard protocol for payments to make it online.
Have you been following the news about the Lightning Network?
Yes.
Yeah. So I don't know. It's a really contentious issue with, half the people saying, well, this is going to revolutionize Bitcoin and make it actually viable to do small micropayments, even for coffee and that sort of thing. And then other people saying, well, this is going to centralize Bitcoin and go against completely what Bitcoin has stood for. What are your thoughts on that?
In my thoughts, I think like that's the research in a good direction, but I still think it's not gonna revolutionize Bitcoin, let's say, payments in the very short term, because it has because of these technological bottlenecks, it still has like some limitations while it will become, let's say, more centralized, and will actually make like all these side chains, it will make kind of a centralized solutions. But I think like it's very good in the meantime until we have like a better, say, technological resources to actually use Bitcoin as it was invented. So, but in my short term, like I still think like the ideal case would be when you will be able to have all your blockchain on any mobile device you have. So let's imagine your mobile phone would have like infinitive hard drive. So you would be able to keep all the Bitcoin on your mobile device. So like everyone would be able to become a node. And then I think it will solve a solution. Another case, you have to improve the mining, because mining is extremely inefficient, because we are wasting so much energy for mining, while probably like only 1% of that energy would be enough to have like a Bitcoin very stable and very useful. But I think like all of the research of the SegWit, of Lightning, of the side chains is in a good direction, and probably will keep a development and keep actually the adoption of Bitcoin in the short term increasing. And then like in the long term, we can find, let's say, better ways to move more to the distributed solutions as Bitcoin is.
Mm-hmm. Yeah, I don't know. I'm of two minds about the future. It's hard for me to predict, because on the one hand, I think you're probably right that we're probably going to see this consolidation down to a couple of major coins, because there's technological pressure to do it, and it's hard for everyone to accept every type of crypto out there, and it's hard even to store it on your mobile device. And even with an infinite hard drive mobile device, it's awkward to have like 5,000 different type of coins all there. So I can imagine this pressure happening. On the other hand, I can imagine each one of these coins having some slightly different use, and maybe as atomic swaps and various inter-blockchain communication services become available, maybe there will become an ecosystem for multiple cryptos. I don't know. It's hard to imagine thousands of cryptos being used in the long term, but maybe there's something out there that'll happen that none of us expect.
Actually, yeah. But actually, my viewpoint on cryptocurrencies is a bit different, and especially when we started the business, we have a bit different philosophy. And and actually, what is happening now? Because why Bitcoin is potential? How can, let's say, explain it in 1 minute? Is, let's say, if you look back, let's say 10 or like even 15 years ago, there have been so many companies who were trying to do e-wallets and etc. But most of them failed because the buy and the send, like the send and the receiver, they have to be the clients of the same company. So only like a few succeeded, like PayPal, Skrill, and so on. Most of them failed because they were not able to achieve a scale. What Bitcoin solves, let's say you can be a client of Spectra Coin back in UK, in Europe, and then you can send the money easily to somebody who is a client of Coinbase to US, And the Spectra Coin doesn't have to do anything with Coinbase. We can only use the Bitcoin as a protocol to transfer money from one wallet to another wallet, while the payments internally can be due off-chain, not on the Bitcoin blockchain. And you can send like the payments from Spectra Coin user to Spectra Coin user in Bitcoins on the wallet. So I think like in that it's similar to the Lightning Network itself, because you have like a local e-wallet providers where you can make a payments between the clients of that company, while you have like a cryptocurrency or Bitcoin, like a clearing protocol for these e-wallets, like you have a SWIFT for banks. And I think that's the key innovation, that's the key potential like for all this ecosystem.
Yeah, the next layer on top of the base layer of crypto, I guess, is what you're saying.
It's the same as you look to the email. Like you can send an email from Gmail to Hotmail, and Gmail and Hotmail doesn't have to have anything in common. We just use the protocol. So it's the same about Bitcoin between different e-wallets.
Yeah, absolutely. Now, the thing is, there are a few different organizations that are actually working on this sort of thing. I mean, there's Swift, obviously, is the existing solution, and a couple of people are trying to disrupt Swift. And, you've got Ripple trying to disrupt Swift. I guess, in a way, Bankera is trying to disrupt Swift as well. What do you think the key factors in whoever wins is going to be?
Like in my opinion, that's actually the beauty of decentralized ecosystem or distributed one. Because if you would have, or let's say, only one winner, let's say only one exchange or only one wallet, then you wouldn't need a blockchain anymore, because all the transactions could be done in that wallet. Therefore, you need at least, let's say, 30, 40 strong wallets around the globe, because like every part of the cryptocurrency has to be decentralized. It has to, like, the mining has to be decentralized as well as exchanges, because if it would be, let's say, only one exchange or only one wallet, that would actually make blockchain unnecessary anymore. That's why, like, I don't believe in these private blockchains or the blockchains which are maintained by one company, because then you don't need a blockchain. And it's the same case for the wallets. And I don't think there will be a winner. There will be a group of winners who will actually have like different shares of the market, but that will make, let's say, Bitcoin strong. So there will be, let's say, no singular point of failure of the ecosystem itself.
And here's another question that comes out of this. Do you think that with the number of people that are coming into cryptocurrency and excited about blockchain, do you think that they care about decentralization in the way that people like you who've been in the space for many years care? Or do you think that it's just about fear of missing out? And because I don't know if anyone who's mainstream, who's coming in and trying to make crypto, part of the regular life, who's a newcomer, would actually, like, if decentralization is really a topic that's very high importance to them.
Like it should make a difference for them, because I think decentralization actually determines the value of a cryptocurrency. But I think they don't think about it. They only think about, so actually I say about not missing out, but they actually should think about decentralization, because the more decentralized and, let's say, the more stable the coin, the more strong, let's say, the infrastructure is. So then, like, the higher the value of a coin will be. So for them, it has to be an important thing. But actually, I think they're not thinking about it. And actually, I think many people who are, let's say, buying now the cryptocurrencies, they probably don't know much about actually how it operates, let's say. Because there are not so many people who, let's say, who are buying the cryptocurrencies and storing them by themselves. They're using their wallets and so on. They usually even don't make any transactions. They actually just buy and sell the cryptocurrency as any other asset. And they don't much think about what is behind it. I think they don't look at, let's say, the potential of the algorithms and so on. They don't compare, for example, Monero to Bitcoin, or et cetera, et cetera.
Let's bring it back to Bankera. What are your plans now that you're doing this token sale? You've bought a bank in Vanuatu. You're really trying to bring banking into crypto, the crypto sphere. What are the next steps? What should we expect from you in 2018?
So in 2018, actually, we'll launch our exchange live, because we also are building exchange with Bankera.com to provide additional liquidity for our tokens and so on. And also, we will launch the final product of Bankera this year. So it will be, let's say, it will be actually the key thing we are developing, because all the banks, or like the bank we acquired, or the exchange, etc., it's just like a building blocks of our view of our view on the large scale, because everything we do is actually we're trying to build ecosystem when we don't depend on the third parties. Because there are many, let's say, companies who are trying to just depend on the APIs of different providers. And we actually don't like it because most of the companies sometimes fail or we change the policies and then you have to find a new partner, so on. That's why we are actually to be as independent as possible, and we are kind of developing the whole ecosystem. So I think like in this year and the next year, you actually will start to seeing how we are adding the different parts of the puzzle to the one big picture. Because for us, like it's not only about, let's say, developing Spectra Coin, on developing Bankera. It's actually about providing the whole ecosystem for our clients, from cryptocurrency wallet at Spectra Coin to cryptocurrency exchange at Bankera, as well as banking services at our bank, and to name but a few.
Now, do you expect that with the purchase of this bank and implementing KYC policies that you would become a recognized financial institution or a recognized bank in other nations and developed nations? Is that sort of in the future for you guys?
Yes, for sure. Like actually the viewpoint of this bank is actually two things. One thing, we are saving probably 2 or 3 years of our time by actually being able to provide banking services in the short term, and to developing, let's say, a product which will be working and have, let's say, a business case which we can show to some other jurisdictions. And another case which is even probably more important, let's say you cannot start a bank from zero. Therefore, you have to have like as well as a business case, client base, and most importantly the team. And let's say if you want to get a banking license anywhere, you have to have a team. And it's not like you're gonna, let's say, hire like the best people in the world and you just keep them on, let's say, on a bench to wait for 1-2 years while we get a license. I think it's impossible. It's just like waste of resources. And then you have a working product. You can start off. You can build a team. You can actually have like a team which already knows each other and so on. And then you can just scale the team by obtaining the licenses in different jurisdictions. And that's our viewpoint for the longer term. It's much easier to get a new banking license with having existing one and having a good business case, a track record, and a team than actually applying from zero. I always give like this example about it's easier to say to start playing basketball, let's say at NBA, before that going to China and playing there for 2 years than just directly going to the NBA, let's say.
Finally, I just want to ask you about your ICO process and like how it was. One of the key aspects of any ICO is having a really good group of advisors, and you've got some really high-profile people. You got the CEO of NEM there, and some of the MEPs. How did you find these advisors and get them excited about your project? Actually,
because we have been in the business for 5 years, we have met like them at the different stages of our development of Spectra Coin. And then like we found the people which will be at, let's say, at the most value for us in the long term. And we invited them for being our advisors. And actually, I think one of the different things from other ICOs which we have, for us, like to be honest, like the advisors now, they are giving us a benefit by giving some insights. But let's say the deal with them is actually that we are going to provide the value actually in the long term when we will be developing the product even more. Because we are not like having the advisors just for the marketing purposes and just to make the ICO better. For us, actually, the advisors, all of them are actually have some additional value for the Bankera we are building. So most of them, they have like some expertise. They have some huge networks, or they have expertise in banking, or they have expertise in marketing, etc., etc. So we actually are building a team of advisors who will be who have a potential to even become, let's say, the part of Bankera. Not all of them, but like some of them actually have a huge potential to become some managers at Bankera and so on.
What advice do you have for a young company that might be doing their ICO coming up in the next number of months?
My best advice actually would be to think if they would be doing the same thing, if there would be no opportunity for ICO. Like for me, like I think the rule of thumb is I would only, let's say, buy some tokens of ICOs, only of those who would be actually in place if ICO would not be an option. But people would be actually spending their own time, their own money to trying to prove something with like extremely small budget. So, and if they believe in that idea, then I would actually go for it. But if the project is only for the ICO, I think it's not a good one. And I think like it's not even worth the risk for the people who are trying to do the ICO. Because it probably will bring more problems for them than the benefit itself. So the key idea is actually the business idea, and then if you believe in business idea, even your ICO will be much more successful.
Vytautas, Thank you very much for taking the time with me. Vytautas is the CEO of Bankera. Bankera is in the middle of their token sale. You can find out more at bankera.com. And thank you very much for joining me today.
Okay, thanks a lot for inviting me.